Good afternoon, everyone, and welcome to Stock Market Today. It's Ali Cormack and Shreve here with a breakdown of the action in today's session, Wednesday, September 20th, with a poor reaction to the Fed rate hike notes, Ken, with the Fed signaling it's not done hiking those rates.
It's not done. We got another look at the dot plot, which is kind of individual committee members where they see interest rates. So they're still expecting one more rate hike before the end of the year. I think what is also interesting in the statement was that the dot plot showed that the market or the Fed funds rate in next year at 5.1%. In June, they were expecting it to fall to 4.6%. So there's this notion, and maybe thinking all along, that rates could stay higher for longer because we've got this strong labor market and really just an economy that's holding up quite well. So still on pace for a soft landing, but the Fed is expecting to cut rates in 2024, just not as aggressively as first thought.
Yeah, so the market really not liking the sound of that. So we'll get to a couple of stocks, but first, let's take a look at the major indexes. The Nasdaq today down 1.5% by session's close. The S&P 500 off 0.9%. We have the Russell down 0.7% today, and the Dow, the least hard hit, down 0.2%. So we'd been keeping an eye on that follow through day low from late August. And it looks like, Ken, we are now relatively firmly below that level at this point as of today's close.
Yeah, no doubt. And, we're just looking at an index here that's been under distribution for a while. We have another higher volume decline for the Nasdaq. So we've got 4 distribution days over the past 10 trading sessions. And when they cluster like that, it almost always causes problems for a rally. So I would say, in light of today's price action, it certainly raises the possibility of a test for the Nasdaq of that 13,000 level. It may or may not happen, but when you get distribution appearing like it is in the Nasdaq, I think it just raises that likelihood. So we'll see how it shakes out. But it's another bad day for growth stocks. We talked about the brutal sell-off for Elf Beauty, one of the big market leaders, yesterday. Celsius took a big hit today. So really seeing the leading growth stocks come under a lot of selling pressure here. So we've been defensive for a while, and I think today's weak price action just confirmed what we've been talking about. This is a market that's under some distribution here.
Yeah, it sure is. And let's also take a look at the S&P 500, similarly closing below the 829 follow-through day low. And so just to expand on our thinking on that, Ken, I mean, when you do get a close below a follow-through day low in a market rally, it doesn't historically mean anything pretty good. If you undercut that low, there's a big likelihood that the rally ultimately could fail, meaning an undercut of the mid-August lows. So that's not an absolute thing that we have a crystal ball, but it is potentially in the cards.
Absolutely. We have a lot of things working against the market here. We've been talking about that, the strong dollar and that 10-year yield that is just, still holding at its highest level in, many years. You can see it tried to go lower today. It closed up near its high again. So higher interest rates, strong dollar, still weighing on this market. I think the one silver lining for the S&P 500, even though it was an ugly close and a close near session lows, it looks like volume was lighter than what we saw yesterday, and volume was pretty light, below average. So looks like we avoided a distribution day for the S&P 500, but your leaders are in quite a bit of trouble here. And when the market tide is flowing negative like this, it's just good to watch from the sidelines. Don't try to make money on the long side, because this market seems to be going after every last stock at this point.
Let's also take a look at 0DJIA. This is the Dow reversing a little bit lower here today, still holding within its recent trading range, so above yesterday's low, but stuck below the 50-day line. What about small caps, Ken? That's been an area of weakness, and it looks like it's just getting weaker.
Yeah, we had a key undercut yesterday that we talked about, that we talked about earlier, and now it looks poised for a test of the 1800 level. So the Russell 2000 has been the weakest index here. Dow really didn't move a whole lot today. It ended with a fairly marginal decline. You had some nice outperformance from Amgen, United Health, IBM. But Russell 2000 here, small caps. Again, it was a pretty bearish session yesterday when that low of 1830 got undercut. So now it looks like a test of 1800 is imminent. It's only 11 or 12 points above that.
Yeah, pretty close there. Okay, well, let's take a look at some stocks, starting with one that looks like it weathered today's storm fairly well, up almost 2% on the day in some volume, and that is Lululemon, clearing a trend line, bouncing off of its 50-day, and getting back above a prior buy point, Ken.
Yeah, positive comments from Needham talking about still great opportunities in China, which is a very strong market for Lulu. This stock moved back into a buy zone today, helped by that upgrade, but it got pulled down late with the market. So we've been talking about a lot of carnage in retail. I'm actually talking about two retailers today that are holding up pretty well. So I think Lululemon has proven itself a very well-run company. Calvin McDonald running a good tight ship over there. You can see on the weekly chart, quarter after quarter of bottom line and top line growth. It's tough kind of finding that in stocks these days. Sometimes you get these little hiccups, but Lulu has been delivering the earnings and revenue pretty consistently, and the weekly chart still looks pretty good here. A nice move a few weeks back when they reported another strong quarter. Kind of a low volume pullback here, holding support. So I think Lulu is still a name to watch in retail.
Yeah, and I'd love to see it get above 400, because if you draw the line back, hit resistance there in
Absolutely.
April of 2022, a little bit of congestion there in 2021, and even a peak in 2020. So that round number seems like an area to contend with. That would be great to see it get above.
It'll need a a market uptrend. It'll need the market tide to start flowing positive again. But along with the Needham upgrade to buy, they did lift the price target to 470. So take that with a grain of salt. But they think that there's potential for a continued improvement in fundamentals here. So still looking pretty good here in a rough market.
Yeah. Elsewhere in retail, let's take a look at Costco. It did reverse slightly lower on the day, but it's forming a nice base that has shown relative outperformance over the last couple of weeks. September has been weak for the market, but Costco carving the right side of a base.
Yeah, that's why you can see that relative strength line that you just highlighted there is kind of shooting into a new high ground, because the market's been weak and Costco has just been bucking the trend. Now, this is a stock. It's a big 250 billion market cap company, so not growing at the clip that they once used to. You can see revenue growth has been slowing down in recent quarters, but technically still a strong stock here. We always like to look at that relative strength line leading a stock into new high ground. So you've got a nice base forming here for Costco. Before today, it was up, I don't know, 9 out of 10, 11 out of 12 trading sessions. So wouldn't be surprised to see it consolidate here. And anytime we see a weekly chart like this and kind of forming the right side and getting close to that left side high, maybe we get a little one last shakeout here. But I think Lulu and Costco are showing relative strength in this week tape. So another good one to keep an eye on here.
Yeah, no doubt. And then let's also take a look at CrowdStrike in the security software group. A mild looking pullback here, Ken, over the last couple of days. And it had a nice reaction to earnings at the end of last month.
Yeah, high PE stock, so that is that presents some risk in this market, but it does have pretty bright growth prospects, and you can see the again, bottom line and top line growth. You've got accelerating earnings for, it looks like, 2 quarters in a row. Again, a positive response to earnings recently, and doing a good job holding these gains. So just keep an eye on stocks showing relative strength. It's really a weak market right now. Like I said, the market tide is clearly flowing negative. So, good stocks and bad stocks are going to have a hard time making headway when you're in a market like this. But I think CrowdStrike has itself as one of the leaders in the security software group, and as we talked about on IBD Live this morning, CyberArk is another stock in this group that is still trying to break out of a long consolidation here, working on its fourth up week in a row. So, a couple names in the security software group that are still acting well.
Great. Thanks for that, Ken. And thanks everyone so much for tuning in. We will be back with more tomorrow morning on IBD Live, and we hope you join us, investors.com/IBD Live, for all the details on that. We will see you there, and we'll also see you right back here tomorrow at the close.